Eric Mwathe. After the close of November 18th, 2014, we are taking a look at the Sensex, and this is the hourly chart, and I am using RSI period of 26. So that's the 26 period on the RSI right there, instead of the usual 14 period. Now it doesn't really make that much of a difference. In fact, let me go ahead and switch that so we can see what the difference could be. And so let's go to and change the parameters here back to 14. And actually, before I do that, why don't I do this? Take a look at recently. We see that there was a break on the RSI, and then we draw a straight line. I just want to show you that there's really not much difference when you switch from 14 to 26. So that's how it looks like if we draw. Let me change colors here so we don't have confusing colors or conflicting colors. So just want to show you that this is 26 period, and you can see that we get, after this break, the market on an RSI relative basis has been coming back to that line and showing resistance. Now let me switch back to 14. And you can see now we are using period of 14, and you can still have the same line. You draw it like that, and you can see that since then we've been coming back to the same line and showing some type of resistance. Now the reason why I prefer to use 26, excuse me, is because it gives less signals, and so that means that you can have an actionable trade. When you get too many signals, sometimes it can get confusing. So I like to use a 26 because the signals are not as many, and I want as few signals as possible so I can have the best trading opportunities as possible. So the reason for this video is you had asked me for a method to trade the Indian market on a short-term basis, and I'm going to show you a couple of methods that you can use by using the 26 period of the RSI, and also by using the main MACD. And on my MACD here, I believe I am using 13, 21, and 8, which all these are Fibonacci numbers. So that's why I use that. Sorry about that, but I was talking about the 13, 21, and 8 being the one I'm using on this chart here, but you can use the traditional and default of 12, 26, and 9. They pretty much don't give you a different view, so you can use either or. It really makes no difference. I just like to use this one because it ties into the Fibonacci series numbers, but you can use whichever you'd like. Those two don't make a difference. On the RSI, again, it's 26 period. So let's take a look at how you can get a couple of points off the market on an hourly chart by considering an hourly chart. And it's always good if you can incorporate your analysis of the daily, weekly, and monthly. But for the purpose of trading short term, you can also use the hourly by itself if you want to trade it, for a couple of hours, maybe for a day, day and a half, 2 days, something in that range. So one quick method is to look for uniformity turnaround situations where the market goes back to the following numbers: 69.1, 50. So these numbers are very critical, and 30.90. Now on Metastock, I have adjusted my RSI settings to reflect those numbers. This is exactly 69.1. Of course, this is 50. And of course, this is 30.90. So the lines you see there on the RSI are precisely where I would like them to be. So what we can do here is try and figure out if we can use uniform activity to the three lines. Any type of uniform activity to this line and a reversal of that is a tradable bounce. any activity, uniform activity back to 50 and back and above it, so below and above, either way, uniform activity to that line on the 50 is tradable, and also uniform activity to the 30.90 is a tradable situation. So let's take a look at how we can use that. As an example, let's just begin with this session here. You can see here over a period of hours, we had uniform activity twice to that level. So the market so at this point here is this type of action where the market did the following. It went above 69.1, and then so those are two uniform activities, uniform activity at this level, and then again uniform activity there. I would take a trade down because of resistance at that 69.1, which happens to be this area here, and you got a short-term move, which is exactly what you want for a couple of hours down. That's one way. Here again you see a move very close to 69.1 that fails. It came very close and failed, which happens to be this high before this nice tradable bounce lower. So if you're looking for situations, that would be one way. You can also see that you could have drawn this another way, which was a slight break in the RSI there. Draw a straight line, and the market came back to that level there. Let me draw that this way. So you can see that there was an initial resistance there. Remember, you're just trying to get a couple points, and here you did get a couple of points off that resistance. You come back and do the same thing with that resistance there, which is the actual high. So that's one view. Also, we are looking at this. We can see here that there's evidence of a turnaround situation when the market came back to 50 here, came back to 50, had uniform activity. In essence, it looks like this. The market came here, went flat around 50, my flat line, and back up. So that's uniform activity, because it's uniform activity to 50 and back above it. That's a tradable bounce, which is this entry here. Now, because the market has been bullish, whenever you get that type of support in a bullish market, it generally means the market is going to new highs. So let me repeat that. If you're trading in a market that is doing well, and the market comes off the highs like it did here, and finds support at the 50 with uniform activity, it generally means the market is going to record new highs after that bounce. And you can test that, back test it to see whether it makes sense. So that's one view. Let's take a look at another view. I see uniform activity above 50 and below 50 here, which is this high. So that is self-evident uniform activity, because what the market did there, again, just trying to make sure that we understand what the uniform activity is market had gone up and back below 50, at this time frame here. Now you can see that without any adjustment, that led to a move lower. So if you're looking for a reason to trade that market in that direction, you can see that makes a lot of sense, that to go short for a couple of points. Again, you can see, and you can use this as long as resistance at the 50, this level here, resistance at the 50, uniform activity resistance, this level here. Now something else took place after that, was a breakout, and a breakout above the tops. So that high, at some point there was a breakout, and that breakout is this entry and a move, and a sharp move above 50. So you know the breakout has strength because the market is moving above 50 after a period of finding resistance below 50. So during this level, this time frame here, the market was consistently finding it difficult to go above 50. Resistance at 50, resistance at 50, resistance at 50, and then finally, out of nowhere, the market breaks out above the 50 level. Remember, you're trading at a market at this point, at this particular point during this breakout, when the monthly RSI is above 69.1, which means that the market is bullish. Internally, the market is finding resistance at this range, but in the bigger time frame, the monthly RSI is already trading at 69.1, so it's still bullish. And so any buy point, any breakout short term, and let me draw this with a different color, so any breakout above this line here, this is a perfect entry point, and you can see that that was correct because the market gapped up and hasn't come back to those levels again. Why? Because the monthly chart is already bullish. Any buy point should be looked at as 3 times or 4 times more powerful, because we are trading at a very powerful monthly RSI. I hope that makes sense. So anyway, if we consider that a buy signal with a breakout above the declining RSI line, you have to go long because of that breakout right there. Now, after that breakout, you can see that there were 2 instances, maybe more, where we came close to 50, for example here, and held, which is this low. Okay, and then recently we haven't even come back to 50, so there hasn't been a tradable bounce in terms of uniform activity back to 50. Now I want to go back, just show you an example. Here the market held at 30.90, which is this lows, and eventually, it wasn't quick, but eventually you had this move higher. Okay, again we come back here, uniform activity back to 30.90, so the market is coming back with a very sharp V-type formation. So here, so at this here, what the market did is it did something like this, very close to 30, if not closer, like that, and quick bounce. And that was uniform activity, which happens to be this entry point for a couple of points. So that should make a lot of sense. There's another way you can look at this. I'm just showing you that you can use the RSI on many ways. So uniformity and resistance at key levels. Uniformity and resistance at 69.1, which is this high, for a good gain on the short side for a couple of hours. You come back again very close to 69.1, you don't even make it there, and show some type of resistance, which is this high, and you get a couple of points to the downside. And recently we came close to that and did not even get close to 69.1, but there was resistance. Now remember, that resistance is another way to trade the market. So on one hand, we see that the market does respond to that uniformity action at 50, at 69.1, and at 30.90. But now let's go back to our uniformity as a tradable idea. So we've seen coming back to, so the first method was watching what the market is doing around these key levels on the RSI, and I'm using a period of 26, 50, and then 50, and then 69.1. What the market does around these levels with uniform activity can be used as a tradable bounce. I want to show you another way, which is what I call uniformity or symmetry. So there's a break in the RSI there. That break point led to a move lower. So even if you don't trade this down move, you know that if the market comes back with uniform activity to this level, let me just draw this straight line because it's going to make a lot of sense. We draw it like that. You got uniform activity back above the line, tradable bounce lower. Uniform activity with a double top. If you zoom in, you can see that there's a hump, and that hump looks something like this, and the line coming through it like that. So that's what's going on here, and you can see that gave a nice tradable bounce there because the market did drop. We come back here, and eventually there's a short resistance there, so you would have gone short there, which is this period here, for a couple of points lower. But at some point the market finally breaks out above what has been resistance line, and there's no uniform activity. There's no uniform activity below the line, so at some point this triggers you're thinking that the market is moving higher. And now what was sell point here, what was sell point previously, now becomes buy point. Double bottom support, short-term low for a short-term and a nice move higher. You come back here, almost uniform activity back to that line, double bottom, which happens to be this period here, and the market did eventually move higher. Again, remember, you're looking for a couple of points gain. We've come back here, we've done uniform activity here, which is this lows for a slight move higher, uniform activity below the line and back above it for a slight move higher. So yes, you can use uniform activity. The same line that was a sell signal for all these days became buy signal after the market finally moved above the line. So that makes a lot of sense that now you use that line for support. Now there's another argument that the market is also giving you sell signal. Let's come here and draw this line connecting this breakpoint and draw a straight line there. Now we can test this to see whether it gives us sell signals, and I think it does. If we go and see that there was uniform activity back to that line, which is this short-term low and a slight move lower for a couple of hours, 2 hours down. We come here, we hit the same level again, which is this resistance, and we get a couple of hours down. We've come back again to this level and found resistance. In fact, right now I'm thinking that the Indian market is starting to show signs of going lower. That's just my thinking, because we've been making incremental highs in price, but yet we are making declining RSI lows. That could be a problem. So let me draw that again. Declining since about the 10th of November, we've been making lower lows on the RSI and making higher highs in price. I think that is setting up for a market that could go lower, in my opinion. So that's what I would watch for. So we are trading here with a market that is giving us two. So we have previous break level. We draw a straight line. This line has become short-term buy signal line, and yet we have another. So let's change colors here. So let's just do that. Yellow, that line there, yellow and blue, and then let's change colors. Go to red. Okay, and then we have a recent. So really, over the last couple of days, the market has been trading and finding support between. So this line has been giving us buy signals and a bounce. And yet, we are now getting sell signals on the way up. So between these 2 points, one can be flipping their direction for short-term trades. So that's another view. So we got uniformity at the critical levels, and you can get uniformity at the previous break levels. So that's another view. Now I would absolutely be looking to go short if we ever break this line, the line connecting the lows like that. If we come back and break this line at some point, I would consider especially a break of this line plus a break below 50 would suggest that the market has changed its short-term direction and looking to go lower. So I would draw this line and keep it on my charts like that. I could even adjust this and take the most recent lows like that. So these are the most recent lows. If it breaks that line, you can start thinking that yes, the market wants to pull back. All right, so just using those lines can give you entries and exit out of the market. Another view is to use the market every time you get the 2 lines on the MACD. So now let's take a look at a MACD strategy. So remember, we are looking at short-term opportunities to go long, go short. We are indifferent to what the market is doing, but here we are only going to consider the MACD and how it responds to the 0 line. We can see that we moved below 0 with both lines there, which happens to be this period. The market did go lower over a period of hours. We moved above the 0 line here, which is this period here. and you had a positive move. Okay, you come here and start showing uniform activity and resistance at 0, which is this short-term high. Uniform activity at 0, short-term high. Uniform activity at 0, short-term high. Uniform, no, not uniform, but eventually you move back above 0 there and also break out above the recent resistance line. So we've been resisting here 3 occasions. Finally we punch our way above that 0 line, which is this entry level. And since then we've been moving higher. Okay, so that's how I would look at that. That moving and using 0 line can give you a direction or bet in the market. Now, just want to add one more thing. If you look at my MACD series on YouTube, you'll see that I mentioned that crossovers above 0 tend to be more bullish than crossovers below 0. So crossover above 0 shows the momentum, and we can see crossover above 0 was this entry level there, and you have a nice move. So my series on YouTube on the MACD, whenever you have time, can help crystallize that theory. One more observation, and it is the breakout of the MACD above a declining line. So of course you can see that this connects the highs on the MACD through here, and finally once we broke out here, happens to be this period here, and the market did move higher after that nice breakout on the MACD right there. So we can also use breakouts in the MACD just like we used a breakout above the previous line here on the RSI. So the MACD broke out, RSI broke out. That was change in sentiment, and since then you can see that the market did actually reward anybody who went long using that theory. So that's how I would play this. Is we've discussed 3 methods of using the hourly. Number 1 method was keeping an eye on uniform activity around these levels on the RSI for short-term direction or bet. So that's, and it's very simple because it's all visual and not emotion based. And then you can also, so that's one method. And then number 2, we've used uniformity. Whoops. Or symmetry. All right, so or symmetry, oops, SYS, or symmetry at critical levels, and especially uniformity whenever you have a line. Once you determine a line and the market is giving you uniformity of any kind, you can use those for sell signals, or if it's for buy signal, if it comes here, any type of uniformity, either showing resistance for sell signals or support for buy signals. That's another method. And then number 3, we took a look at the MACD as a method where we are using 0 line for direction when both lines move above 0, or trend break. So whenever there's a trend break in the MACD, then we can also consider that as a signal, and also a crossover. So crossover of a MACDs, for example, on a bullish trade above 0 tends to be more bullish. And I did talk about using my series on YouTube where I discussed the MACD and just go into more detail. So I would encourage you to take a look at that, because that does help crystallize what I'm talking about here. So between these 3 methods, anybody looking to use hourly charts for short-term trading, especially if you're a day trader, this is one strategy. And remember, on my RSI, I am using 26. And MACD, you can use the default MACD, or you can use 13, 21, and 8, which is what I'm using here. I'm just gonna end there. I hope the video has been helpful in helping us determine when to use short-term market visual triggers for trades. Eric Mwathe, good luck, peace, and blessings. Mwah! I am out. Woo!